Hello everyone, this is Prathamesh Malya here. Today we are going to take a webinar on basics of commodities. In this webinar, which would possibly run for 15 minutes short, we would have four major topics for discussion. As can be seen in the presentation, the topics for discussion are as highlights of exchange-traded commodities first. Second is major economic data releases that one should know about if you want to trade in commodities. Third, fundamentals that drive major commodities and their prices, and what's in store for commodities in the near term. Before we start, it is very important to know which are the exchanges that trade commodities. MCX and NCDX are two major commodity exchanges that trade commodities. However, very recently we have BSE and NSE, which has started trading of commodities on the exchanges. And the recent developments that we have in commodities is introduction of options, which is a new product that's there for clients to trade. Before we start and understand commodities, it is very important to understand what are the sectors or products that we have on the table for investors to trade. It can be classified into four categories. First is precious metals, in which primarily there is gold and silver. Two commodities are traded. Second is base metals, in which copper, zinc, lead, nickel, aluminium, and very recently bronze has been introduced by the exchange. Third is energy, wherein crude oil and natural gas is traded. And fourth is agri commodities, wherein wheat, chana, soya oil, soya bean, jeera, and turmeric, and most of the other commodities are traded. In order to understand the intricacies of commodities, it is very imperial to understand how commodities are traded, what are the terminologies that are used in order to trade commodities. As you can see in the presentation, if you want to trade commodities, commodities are traded in lots. Lots means if vis-a-vis equities, if you want to purchase shares of HCL Technologies, you will buy an amount, say 10 shares, 20 shares, 40 shares, 50 shares. Similarly, if you want to buy or put a trade in commodities, it is said to be purchased in lots. It can be one lot, two lot, 10 lot, or 50 lots. Since these are derivatives and these are futures contracts, the system is based on something called as margin, which means if you want to trade a particular commodity, you have to keep minimum amount as margin in order for you to trade that commodity. For instance, if you want to trade gold, the minimum margin that is required for you to trade gold is around 1.6 lakhs. The calculation of 1.6 lakhs can be seen as in the presentation, wherein 32,000 rupees per 10 grams is the tick size that you see on the screen. 100 grams is the contract size of gold, and 5% is the margin wherein you can arrive at an amount of 1.6 lakh. Second basic understanding for M2M for commodities is since these are commodities and since these are derivatives, this is settled on the basis of mark to mark margin, wherein whatever is your profit or loss will be settled on that particular day itself, wherein the terminology in the concept of commodities is said to be as mark to market. Contract next. Commodities, since these are derivatives and these are future contracts, you have at one point in time almost around 6 contracts running for any commodity. Future date, since this is a future contract, you have a contract system to deliver the commodity at a future date. But just one note of caution, not every commodity on the exchange is delivered except gold and silver, and exchange is trying their own set of rules and mechanism how commodities can be delivered to the investors or individuals. Very important on this slide is product specification. This particular screen gives you a glimpse of how much profit or loss will you make if you want to trade that commodity. Just to give you a brief, the first says gold. The lot size of this commodity is 1 kg. The rate that you see on the screen is rupees per 10 grams. Tick size is the amount of price that it moves, 1 rupee plus, 1 rupee minus. Profit or loss is nothing but every rupee of increase or decrease in the commodity will give you a profit or loss of 100 rupees if you're trading in gold 1 kg lot size. Similarly, if you trade in copper, which is a lot size of 1 ton, and the rate that you see on screen is rupees per kg, the tick size is rupees 1, which means every 1 rupee move up or down will give you a profit of 1000 rupees or a loss of 1000 rupees. Similarly, you can understand all other commodities. Important is how much money that you put as margin and what's the amount of profit that you get on tick size. Since commodities are volatile in nature, it is very imperative to understand what are the economic indicators that are releasing from most of the countries that you see on the screen. Since United States is a major consumer and producer of major commodities, it is very important to understand what are the economic data set that are released from this country. The prime importance can be allocated to federal funds rate, unemployment data, housing statistics, retail sales report, manufacturing PMI, and important of all is consumer confidence index. All these economic indicators gives you a glimpse of how the US economy is performing. Vis-a-vis, you see a price reaction on all the commodities, including gold and silver. Similarly, you have it for Eurozone, you have it for United Kingdom, you have it for India as well as Japan. All these economic indicators gives an investor a sense of what is happening in that particular country with regards to employment scenario, with regards to growth in that country, with regards to housing environment that's being built up, with regards to purchasing manufacturing index. So it clearly gives you some and a gist of whether the country is growing or not, whether the country is slowing down or not. What are the benefits of commodities trading? As you can see in the screen, I can say it's easy to understand for those who devote specific amount of time in order to learn this particular asset class. It's a 14 hours market and it is linked to global market, which is one of the best benefits that you can have trade on any asset class. And since it's globally traded, you can have easy access to all the information that's available for investors to understand. As we have seen before, there are four set of sectors if you want to trade commodities, and every set of sectors has their own fundamentals that drive the price of that commodity. As far as precious metals are concerned, I think the situation of labor market in the US, which clearly says the employment or the unemployment scenario, clearly is one of the important factor that drives the price of gold as well as silver. In interest rate hike and different scenarios put in by the projected by the central bank is also one of the important factors taken into consideration which drives the prices of precious metals. Similarly, you have crude oil, wherein OPEC plays a very important role in deciding the production quotas. The second important factor that you see is crude inventories, which is one of the major decisive factor which directs and the direction of the price of crude. Similarly, geopolitical tensions happening anywhere across the globe create a price impact on crude. And similarly, if you look for base metals as well as agri commodities, the pointers clearly say that these are the key factors that determine the price direction of the commodity. And hence, it is imperative to understand all these fundamental factors in order to gauge the price direction of the commodity. These are some of the angel reports that one can have access to, and depending on the event we release specific reports. Otherwise, the normal periodic reports we are releasing is daily report, which has a conclusive coverage of major commodities, non-agri as well as agri. We have weekly as well as monthly reports which give investors a perspective on how the commodity is going to be traded in the longer term. Similarly, we have technical reports which gives us a glimpse of how the price of the commodity will be moved depending on a daily or a weekly basis. And there is one important report that we cover and we make, that's an annual report which gives an investor a glimpse of what has happened in commodities in that particular year and what is going to happen for the rest of the year. So this is what Angel Commodities Research has to offer for our investors. And these are some of the sites. If you want to learn more about commodities, it can be commodity specific. For instance, if you want to learn more about zinc, you can go to ilsg.org. If you want to go more learn about technical studies, you can go to www.babypips.com. Similarly, depending on your area of interest, you can visit all the sites and increase your understanding of the commodities. Thank you very much.